from? Chris, you're from Mauritius. Fantastic. We have a worldwide audience here at Invest Diva, as I'm sure you know, so that is amazing. Welcome, Chris. And Michael's from North Carolina. Welcome, Michael. We've got Rob from Colorado. Good to see you, Rob. Javier from Florida. Welcome. Super excited to have you. Yeah, so if you've attended day 1 or day 2 yesterday, absolutely incredible value bombs being dropped by Kiana, as always. So let me know what your favorite takeaway moment was from yesterday if you were here, or if you weren't here yesterday, if you were here on day 1, let me know either way. That would be great to call that out and to hear what your favorite takeaway moments were. I know there were so many yesterday, and the chat was literally scrolling constantly, and we were streaming this out onto different platforms, and the chat and the comments were constantly streaming with takeaway moments yesterday. It was absolutely fantastic to see. Welcome, Kat from Ireland, not far away from me. I'm over in England, in the UK. Good to see you, Kat. Excited to get started in around 10 minutes time, guys, and we'll be welcoming Kiana to the Zoom stage very, very soon. We've got some more students coming through just while we're waiting. So obviously we are going to get started in a few minutes, just waiting for everybody to come through and get seated and ready. And again, as always with Invest Diva, we always recommend you bring the energy, because that's super important. It's 1:30 a.m. here in the UK, but my energy is always sky high. If anybody who knows me well will know that. So yeah, definitely bring your energy, bring an open mind, and be prepared to be very, very excited from what you're going to learn tonight or today, depending on where you're calling in from. We've got Carlos from Massachusetts. Welcome, Carlos. Do we have anybody on the call so far who was actually here yesterday? Pop a 1 in the comments or the chat box if you were here yesterday. Oh, amazing, Lisa. Good to see you. We had a huge, huge turnout yesterday. Lots and lots of people tuning in from all over the world to yesterday's live session. Oh, I'm pleased you enjoyed it, Lisa. That's great. Okay. Oh, yeah, definitely. There was so much information, wasn't it? I know the takeaways yesterday in the chat were incredible. So there's so many people with lots of aha moments, takeaway moments. Super high value. We always aim to over-deliver at Invest Diva. So if you're brand new to Invest Diva and you don't know anything about the Invest Diva movement yet, then our style is to always over-deliver. That's just what we do. We care about every single one of our students and our community, just like family. So really, really welcome to you if you're brand new to the Invest Diva movement. We're super excited to have you, and we're looking forward to delivering lots of value for the rest of this week, as well as leading up to, of course, the Build More Wealth Live Challenge next week. So hopefully you've got your ticket for that. It's Monday to Friday next week, so February the 6th to the 10th. Hopefully you've already got your ticket, and it'd be amazing if you've got your VIP ticket. You'll get an extra hour with Kiana to be able to ask your questions live as well. So always super valuable to be VIP if you can be. That would be amazing. And if you bought a general admission ticket already, you can absolutely upgrade to VIP as well. No problem at all. So if you need to do that at any stage, just let us know. Drop a comment in the comment section or the chat, and we can get that arranged for you very, very quickly. Okay, so we're going to pop into a testimonial reel video now to show you some of our students and this sort of success journey they've been on, and the sort of life transformation, if you like, that they've been on as a result of attending our previous Build More Wealth live challenges. So just going to run that reel now for a few minutes, and then when this reel is finished, I'm going to welcome Kiana Danielle to the Zoom stage for you all. Okay, so sit back, relax, and watch this little video for a few minutes. I'll be right back with you.
Joining us right now is InvestDiva.com CEO, Kiana Daniel. Great to see you, Kiana. Thank you so much for being here.
Investing superstar, best-selling crypto author, CEO of InvestDiva, Kiana Daniels, joined us now. And Kiana, you were actually featured on a Business Insider piece recently where it says you shared your 3 habits that allowed you to build a $2 million portfolio.
Kiana Daniels with us, best-selling author and CEO of InvestDiva.
CEO of InvestDiva.com, Kiana Daniel.
The CEO of InvestDiva, Kiana Daniel.
Kiana, great to have you. Thank you so much for joining us.
I actually had the pleasure of receiving my 500K Diva Award. Again, like I said, it's been less than a year that I have been doing this, and just listening to everything that Kiana said and doing that again and again and again.
My name is Roel Ramos, and I help young adults who aspire to be entrepreneurs make a profit from their passion. And in my first month of 2022, I actually made $90,000 in one day.
My name's Philip Thomas, aka Kenyard. Officially a business owner. Built up the business slowly, and then, hey, next thing you know, I am at $100,000. So it was great. To be honest, I never thought about reaching that level before because, I don't come from money, right? I started working since I'm 14 years old, and I've always done things on my own.
Imagine you started doing something and in less than a year you get an award.
And what Kiana brings to the table is just something so authentic and so genuine that you just know that you were supposed to be in this space with her, and she's just helping you every step of the way. It's truly an incredible feeling.
Built up the business slowly, and then, hey, next thing you know, I am at $100,000. So it was great.
It's a celebration of my win, but it shows that I invested in correct thing. I could achieve what I was looking for. And it's a proof that Kiana's method works.
My name is Patrice Garcia, and I am a financial advisor. And then I actually did resign from my W-2 job, and now I am officially a business owner.
Ron Jensen. I'm a certified life coach, and I've been doing that for 30 years.
People who are action takers are money makers, and that's one of the things that Kiana's taught me. Trust the process, and because if you don't do it now, when will you actually go and change your life?
And Kiana gives you all of the things you need to get there and become the best version of yourself.
By just seeing how many people received awards and some met $1 million, that's a proof that it's really working. It's really working for everyone, and it doesn't matter what's your educational background.
Kiana is the right person. She teaches you in a style that is very easily understandable.
Enjoy your life and earn your freedom back. You're going to get your time back. And especially if you're a mother, you have a family, or if you have other passions that you want to spend your time doing, this is the way to do it. And if you keep waiting, you're going to keep putting it off, and there's never a perfect time. So just do it today and enjoy your life.
Move forward, because I know the price of letting fear stop me, and I didn't. So please don't let that happen to you. I'm really grateful to have someone come to me that has walked a path, that has learned from suffering, and help other people not to suffer, because that's pretty much my story too.
I was able to make it to 100K, and now because of that, we'll be able to build our basement. Because we thought, oh, that's going to be in 10 years from now. But when you're investing and you know how to invest and make your money grow, like Kiana says, make your money make babies, then you have cash to do what you've always wanted to do a lot sooner.
I am Jasmine Perez. I am a pediatric oncology nurse.
Trust the process, and because if you don't do it now, when will you actually go and change your life?
Say something. I can't tell you how much this community, when I say I was broken, I was broken. I don't know where I would have been if I hadn't found you, if your ad hadn't popped up. I signed an offer with the job, and the thing they liked was what I'm doing with my empowerment. They want me to come and empower their employees. They want me to help them stabilize their culture, and they're like, what you're doing with women's empowerment, that's what we want to do for our employees. I would never have had this opportunity if I hadn't found you. My year would have looked completely different. My life would have looked completely different.
I am Janie Clay, and I am a nurse practitioner.
My name is Shelly Flores Hernandez, and I am currently a licensed optical manager. I work for an optometrist, but I also do other things on the side.
My name is Ramona Mukherjee, and I am a psychotherapist at present on my way to becoming an entrepreneur.
But with the entrepreneurship and the passive income streams, it's a faster way to be able to get those things that you wanted in your life that you thought you'd never get.
I would definitely say Kiana is like the most amazing person. She's real. In person, I'm amazed that I met her. I'm like, wow. Because she transmits that all through a video. And she knows what she's talking about.
I've been yearning for so long to feel like, what's the path? Where's the direction? How can I do this? How can I do this in a way that feels accessible to me as a woman, as a woman with an immigrant background? And I feel so grateful and just like activated, really activated, that I finally have that path. Like something about the way Kiana leads it and all the people that are part of it, part of her team.
Yeah, for me, it's that. It's being able to do what you want in your dreams and realizing that it's possible. And I want to be able to share that with my son and build like this wealth so that it is possible. That I can give something to him and know that he'll be able to do whatever he wants in life and to be able to give that gift to him.
People who are action takers are money makers, and that's one of the things that Kiana's taught me. Other things I'd love to say about Kiana is she's so humble and she's so sweet, and she's just an awesome role model. And honestly, I just wish that, as I go on this entrepreneur journey and business journey, I want to have that for myself as well. Never forget my roots and always be humble and nice.
I shifted my mindset more than anything. And now I have the resources to kind of follow through with that mindset and with that decision. Because you can make the decision all day, every day. But if you don't know what to do next, you're not going to get anywhere. So I think that's the biggest thing, is taking action and knowing what action to take.
I felt transformed. Like I just needed to know more. I needed to be in that space that she was in. It was just a certainty that I hadn't felt in a very long time. So where I am now, it's been less than a year that I've been on this journey, and I am a completely different person.
The teaching, the foundation, is what really we need in life. Because if we don't have that foundation, we're just picking and guessing. And Kiana changed that whole phrasing into, you have to understand what you're doing,
And Kiana gives you all of the things you need to get there and become the best version of yourself.
It's not only about investing. You will be empowered, you will be confident, and it will help you to make better decisions in different aspects of your life.
I would like to say that I am just truly thankful and grateful for Kiana. She is a humble person. She is a giving person. In less than a year, I was able to get to that 500K level.
Wow. I hope you really enjoyed those testimonials from our real students, obviously, who have been through this challenge in the past and have absolutely transformed their lives as a result. So I hope you enjoyed that. But without further ado, it is almost time to welcome Kiana. So without further ado, let's welcome best-selling author, the CEO of Invest Diva, Kiana Danielle, to the Zoom stage. Welcome, Kiana.
Hello. Oh my goodness. I cannot believe we don't have any technical difficulties today.
Perfection. Yeah.
I'm so excited about that team. Hello. Good afternoon. Good morning. Super excited for you to be here tonight. This is day 3 of our pregame. We're still pregaming. We're still warming you up for the Build More Wealth Live next week. And I know Tristan has already asked you a bunch of questions about your takeaways. And really just understand that I'm here to serve you. I really want to know how I can serve you at the highest level possible. I know this is a free event right now, but I don't care. I'm here to create value. So I want to know your questions. I want to know your frustrations. I want to know how I can help. So with that, yes, I do want to know what were some of your takeaways from day one. I do want to know how many of you have been actually continuing with your new, renewed money beliefs that we established in day one. How many of you, first of all, were here on day one? I see Javier was here, Lisa was here. So how many of you are thinking that quite shift of your mindset about wealthy people, about money itself, about you being deserving of wealth? Yes, we're getting Mary Jane saying yes, Pau saying yes. So we're going to do a little bit of, we're going to start today with a little bit of a mantra, because we're not going to go all in to the mindset today. Actually, today we're going to talk about risk tolerance. Let's do a little bit of a recap. Day one, we went all in on your money mindset and what wealthy people mean to you, because if you are not a person who actually believes that being a wealthy is a good person, in fact, let me see, how many of you are good people? Wave at me. Put a thumbs up or a 1 in the comments if you are a good person. If you know you're a good person. Because first of all, that is the kind of people that I want to work with. All right, we're getting a lot of ones here in the comments and the hearts. And I want you to know that you are a good person. I'm not here to judge you, but I know that I attract people that I want to work with. I attract good people. Why do I ask this? Is because you, as a good person, if there is even an ounce of doubt that money is going to make you a bad person, what are the chances of you welcoming abundance into your life? Ooh, right? It's going to be that you're going to be getting in your way. So all the good people here in the house, I want you guys to start tapping on your chest. I'm going to start here and say, money is good. Money is good. I love money. I love money. And money loves me. Money is good. I love money, and money loves me. I create abundance for myself and others. I create abundance for myself and others. Put an A in the comments if you're committed to creating abundance for yourself and others. Put an A in the comments if you're committed. And this, by the way, is my mission in life. My mission in life is to create abundance for myself. Why do I have myself in it? Because I need a full cup. You cannot give from an empty cup. In the airplane, they say, put your own mask on before you help others. You cannot give from an empty cup. So you first create abundance for yourself, which is what you're doing right now. You are here. You're an action taker. You're my kind of people. I'm so proud of you. So give yourselves a hand for showing up again. It's day 3 of a warm-up party. Like, you guys are amazing. And then you're going to go ahead and give to others. Tomorrow, I'm going to be meeting, as you guys know, we have now partnered up with CARE organization, this charity that helps women all around the world. And I got carried away I randomly got invited to their party last year and I got carried away. I'm like, yes, Tory Burch was there and we donated a bunch of money. And tomorrow I'm meeting with her. And this is what wealthy people who gain their money ethically and are good people do. I know I'm a good person and I know I want to create abundance for others. So the moment I make a bunch of money, I go and I help others. And that's why I continue working. That's why I'm here on whatever, it's a Wednesday night. I would like to, go binge watch Netflix downstairs, but I'm not. Why? It's because my mission to create abundance, not only for myself, but for you as well. So again, give yourself a hand for showing up. We're seeing more people joining on Zoom. We have people on TikTok and our Instagram here as well. Come join me on Zoom. Link is in my bio. So let's do a little bit of a recap of yesterday. Yesterday, we went deep into the market. We looked at the S&P 500. We looked at the history of the market. And we talked about, how many facts did we talk about yesterday? We talked about 6 facts about the markets that we're going to free you from any fear around all these markets ups and downs. How many guys remember fact number 1? Fact number 1 was on average, corrections have occurred every single year since 1900s. Fact number 2 was that only around 20% of all corrections turn into a bear market. We talked about what a bear market is. We talked about what a bull market is. If you didn't watch yesterday, go back and watch a replay. It is on Facebook as well as on YouTube. We talked about the fact that literally nobody can predict where the market is going to go. We had some chats saying, oh, the people who really know are panicking. And I'm like, nobody knows. And if they are panicking, that shows that even more that they don't know what they're talking about, because history repeats itself. Because we know that what goes down must go back up, and vice versa. What goes up goes back down too. And that's the reason why we have corrections to begin with. Fact number 4 was that markets rise over time. Despite all of these short-term ups and downs, markets rise. Markets do what? Markets rise. Markets rise over time. And we also talked about how historically bear markets happen every 3 to 5 years. That's a lot of bear markets that we cannot afford to be panicked about. And last but not least, we talked about the greatest danger to your portfolio, the greatest danger to your money, which was what? Which was being out of the market, which was leaving your money in the bank. How many of you right now have a bunch of money in your savings account? Put an S in the comments if you have a bunch of money sitting right now in the savings account that is not your emergency fund, that is not, something that you're going to pay your credit card with. We have so many S's here, and it breaks my heart. Oh my gosh, I am so glad that you guys are here. So today we're going to calculate exactly how much money you should be leaving in a savings account and how much money you should invest. Would that be helpful to you guys? Put a yes in the comments if that would be helpful to you guys. And then how to create your investment strategy. So all of this begins with something that majority of investors, traders, media influencers, all of these, Jim Cramer, CNBC, all of these people who talk about investing and know what they're talking about, and they may even know what they're talking about. They're talking about inflation, I don't know, what have you, but they're not telling you that, hey, investing is personal. Personal finance is personal. What is making sense for Jim Cramer today may not make sense for you today. Because guess what? You are not Jim Cramer. He's not you. You're in different situations. My strategy may not be suitable to you. I'm not here to tell you what to do. My job at Invest Diva with the Invest Diva movement is to help our students learn how to think, how to do it on their own. Yes, you can hand it off to a money manager, but how many of you truly believe that a money manager is, even if they're like amazing people, is going to have as much love for your money as you do? Nobody cares about your money as you. It's your money. And you know you more than anybody else. So you are the best person to create that strategy for yourself. And it is not that hard. they make it hard, because if it's revealed how easy it is, the money managers and the financial advisors, they're going to run out of job. And I hate to see some people running out of job, but this is like, their job is like being a bus driver. We have bus drivers, even though they're now being replaced by automated drivers. But would you rather drive a bus or have your own driver's license? Why is it that at 16, everybody, all the kids are super duper excited to go and get their driver's license, but nobody's talking about learning how to manage their own money? Like, which one is more important? Getting to that party fast, or making your money work for you so that you can retire so that you can party? Which one is more important? Somebody tell me managing your money. Put an M in the comments if you believe managing your money, learning how to manage your own money is more important than getting that driver's license. That's why I'm so passionate about teaching this to parents, because I want the parents to then teach their children. My nephews have learned how to invest now. They're 10 and 13. And it's so awesome to see they're like excited about like their Apple and their, all the stocks they're buying. Tristan, his kids are into investing, right? They're like, choosing the stocks. Tell us a little bit about your kids, how they're investing. You guided them. You went through the Make Your Money Work for Your Power course.
I did.
And then what happened?
I did. So I went through the power course really quickly because I was super excited to get my money working for me. And I taught my children, obviously a simplified version of the power course. They were only at the time 7 and 11 years old. And I taught them about that, and it's changed their whole outlook on money and how they think about money. And also they are genuinely making their own investment decisions themselves. They've got a custodial account, which they are building up, and they started with pretty much nothing, started to add some pocket money and birthday money and things like that. And they've gradually built their portfolio around assets which they know and love already in their young lives. So brands such as Apple, for example, because they've got iPads or things like that, or maybe Netflix and Disney and things, and companies which they already know and are very well connected to at their young age. So again, investing is personal, and that's why we talk about assets that they already know and they already know very well, so that they feel really connected to the decision. And then obviously we've guided them on that process, but ultimately now they make all of their own investment decisions. They come to us and say, Mum, Dad, can I invest in this? And we absolutely support that. And they even look at the chart with us. Okay, they're age 13 and 9 now, but even so, my 9-year-old looks at the chart. He can tell the chart patterns. They're really excited. They even know a bit about crypto as well. Can you believe? And it's just been absolutely life transformational for them. And for me as a parent, the peace of mind that to have your children to have their financial future taken care of cannot be underestimated. I just feel so grateful that, that we've been able to take them on this journey so that they can take control of their own financial future from this very young age. It's just super powerful. So yeah, that's their story. And their portfolios from a standing start about a year or so ago is around $5,000 each at the moment. So they are super excited.
That is so cool. Like, can we just give Tristan a hand? Like, that is just amazing. That is cool parenting. That is gentle parent. I don't know, whatever you want to. That is abundant parenting. That is abundant parenting. True freedom. Super duper cool. So with that team, of course, then, if you want to guide your children, I want to know how many of you guys are parents here in the chat. Put a P in the comments if you have kids, if you're a parent. And so, of course, when you are guiding your kids about investing, again, your investment strategy is going to be different than what they might choose to do, because guess what? You guys are in different times of life, different risk tolerance, different ability, different willingness, different confidence. So all of that comes to play. So that is why today I'm going to teach you how to calculate, how to understand truly your risk tolerance, not what you just feel. That's part of it, but we're going to actually measure your risk tolerance. And this is very important, because once you actually know your risk tolerance, you can avoid a bunch of things. In fact, not knowing your risk tolerance will be the reason why you would panic, you would catch FOMO, you would stress, you would get stuck to your screen all day. And not knowing risk tolerance is the reason why most investors lose all their money. On the other hand, knowing your risk tolerance has a bunch of advantages. You can remain patient. You follow your strategy that you created because it was personal. It was based on your risk tolerance. You go about your life without feeling the need of checking the markets every 2 seconds. And you're gonna live longer. And you're gonna make a ton of money in the markets. The reason why I say you're gonna live longer is because I actually learned this in Japan. You know how in Japan, I used to live in Japan. I lived in Japan for 7 years, and Japan has one of the longest lifespans in the world. And they asked all of these old Japanese people, what is the secret to their longevity? And they said, low stress, certainty, and Zen. So we want you guys to be able to invest without getting a heart attack. How many guys watched Friends, the sitcom? Like, to me, not knowing your risk tolerance, you guys remember that episode where Phoebe, like, they say it's the coulda, woulda, shoulda episode? By the way, Friends is how I learned English. They taught me how to how to speak English. So that episode, Phoebe and the coulda, woulda, shoulda, she could have become a stockbroker, and like literally like in 2 days she has like 2 heart attacks. So we want to prevent that. We don't want you to have heart attacks. And the way to go about that, the only way you can avoid panicking, is to know your risk tolerance. All right. So with that, team, today is going to be very, very interactive. You are going to bring out your notebooks. Bring out your notebooks, put an N in the comments if you have your notebook. Put an N in the comments if you got it. And also get a pen, or if you have a remarkable, by the way, I'm going to throw this here. Actually, my assistant was asking me today, are we giving giveaways at the Build More Wealth Challenge next week? Because we always have like some awesome giveaways. How many guys know what this is? So last challenge, to our VIPs, we have this rattle, and we're giving away like these amazing, amazing gifts. And one of them was a remarkable notebook. It is truly remarkable. So if you want to get a chance in winning a remarkable notebook, sign up for VIP at buildmorewealth.com. All right, so you guys got your notebooks, amazing. And now what we're going to do is that we need to figure out, I'm going to share my screen now. And for those of you who are watching me on TikTok and on Instagram, come on over to Zoom, or at least on Facebook or YouTube, so that you can see my screen. All right, what we're going to do is that we're going to figure out what the market geeks would call balance sheet. Now, balance sheet is a very confusing word. We're going to remove that and call it your current money situation. That's all a balance sheet is. I was so confused about the word balance that I didn't understand it. Now I kind of get it. But again, as somebody who didn't really speak English at the beginning, I was very confused with that super intimidating term. But then I found out it's just your money situation. What's where? What's up? So we want to know what's up with our money. And this is super simple. And it's something that you want to actually monitor every few months, every year, after a very specific or big major thing happens to your life. All right. So, and it's something that most people aren't even aware of. So when the very first time I was checking my balance sheet, I didn't even think to put a bunch of things as an asset. And I didn't even, I had forgotten about a bunch of my liabilities. So that is something that we don't want you to forget. Again, today is going to be a little bit simplified. I'm not going to go super the nitty-gritty. If you're already in the power course, you probably have done this before, but it doesn't hurt to do it again and do it in a simplified way, because things may have changed, your risk tolerance may have changed. So let's do it right now, right here. So you're going to, on your notebook, you're going to create something like this, right? So you're basically going to draw you're going to create 3 columns, right? You're going to have assets, you're going to have liabilities, and then you're going to have an empty column to the right of that. All right. So you're going to have the first column is going to be your assets, all your properties, whatever it is that you have at its fair market value. So here you can put in so many different things at the current market value. So for example, you can put obviously your cash, all of that money that is sitting in the savings account, you put that number. You don't have to have the exact number right now. We're going to get an estimate, and then you can get a little bit more nitty-gritty in the power course. But so cash or cash equivalent, what does that mean? Anything that you can instantly transfer and turn it into money. Cryptocurrency, assets, right? And I know that you are the most valuable asset, but right now that would be $1 billion. We're not going to put that under the assets column. We're not going to put you, although you are certainly an asset. And it actually does matter. In fact, I know that in traditional personal finance, they wouldn't include somebody's skills in the assets part of balance sheet, but I really do believe that they should, because guess what? For instance, let's say that right now, my net worth, my portfolios altogether is worth somewhere between $5 to $7 million, depending on the market, depending on the day, because the markets are very volatile. All right, so that is what the number says. But in my life, if you look at my life, I've written books, I have a course, I have a team, I have skills. If they take all of my money away today, with my skills, I know that I'm not going to be starting off from ground one anymore. Like, it took me 10 years to get to where I am today. But if they take my company away, if they take all of my books away, I don't know, if something happens and like poof, all of it is taken away from me, just like it happened to my dad, by the way. So this is interesting, right? So my dad had this massive company in Iran before the Iranian Revolution, and very wealthy. This is before I was born, and boom, the Iran Revolution happened, and the government came and took everything away from him. Now, there were other people who were like my dad, who got their assets frozen by the government. And what they did is that they took a massive risk and they fled Iran through the bombardings and Pakistan border in like really, really dangerous situations, dangerous conditions. They fled, they searched for asylum in other countries. And now if you look at them, there are so many Iranians, for example, right now in LA, in New York, who fled Iran right there and then with no money at all, only brought their skills that they had acquired with them, and now they're living really wealthy lives. That's exactly the reason why they created this reality TV show, The Shahs of Sunset. I was supposed to be on Shahs of Breakneck, but then the show got canceled. Those are all the Iranians who brought their skills with them because they were the value asset. Now, what did my dad do? Again, I'm not trying to hate on him or bash him in any way. He's a very smart person, but he was very attached to what he had lost. And he decided they were actually going to leave Iran. So the story, I don't think I've told the story before, but this is before I was born. The story goes that they actually were about to leave Iran the night before. They had everything packed. The night before, my dad decided that he's staying and he's going to sue the Iranian government. Now, that is a very ballsy action. But it was also the fact that he was obviously scared of leaving and he was too attached to what he had lost, which ultimately resulted in more difficulties in our life, right? So what is the point of the story that I'm telling you? is that if you have skills, and we are going to talk about skills in Build More Wealth live event, we're going to develop those skills. If you invest in yourself so that you are just the most valuable asset in your life, then you're not going to care about anything. Your risk tolerance is going to go through the roof. All right. But for now, just for the number's sake, again, we're not going to put your actual value in the assets column for the balance sheet. And you're going to put down any furniture, any jewelry that you may have that has value. Investment assets that you may have in your 401k, in your Roth IRA, in your brokerage account, educational savings, personal assets like your car that you own, not lease, your equity on your home, equity, right? A boat, clothing, maybe you have an antique Chanel bag, I don't know. Basically, assets that you use to maintain your lifestyle. Go ahead and write down as many items, as many things that you can think of and put an approximate market value next to them. Again, you don't have to, be super specific right now. We're just going to get an approximate number. Okay. And then once you're done with that, I'm going to give you a little bit of a time. On the second column, the middle column, now you're going to put this thing that they call liabilities, debt obligations on the stuff that are owned by you. Now, again, I know that Mr. Dave Ramsey have made this debt thing, this evil thing that nobody should hold. And even though right now we are using it as a measurement for your risk tolerance, I'm here to tell you that not all debt is bad. In fact, again, I believe in day 5 of Build More Wealth Live, I'm going to go deep into what kind of debt is good and what kind of debt is bad and how to use debt to go further in life way faster so that you can become wealthy faster and enjoy your life faster. But right now, again, for the sake of just numbers and peace of mind, we are going to put all kinds of your debt. So what are those? Those are going to be current liabilities. What are current liabilities? Anything that you have to pay off within the next 12 months. That could include your credit card, unpaid bills. Long-term liabilities then, on the other hand, are anything that you must pay off beyond the next 12 months. Things like the mortgage on your house, your car loan. All right. So just to the best of your understanding, if you have any questions, just put it here in the chat box. Best of your understanding, just put it on the second column. So now you have a bunch of numbers on the first column. You're going to take out, I can't take out my calculator because I'm streaming also here on TikTok and on Instagram, but take out the calculator on your phone and sum all of your assets up. And then the second column, again, the same. The total, not the monthly payment amount, the total of your liabilities, like how much is left on the mortgage of your house, how much is left on your car payment. All right, sum them up and put an S in the comments if you have summed them up. You should now have a total. Rent is not a liability. Rent, we're gonna bring your rent in the next. So this is why there are two different sheets that you have to make sure of. This is something that you have to pay off as something that you own. All right. Liability, rental property, that is income. So rental property, money coming in, money going out, we are going to take care of that in your cash flow situation, cash flow statement sheet. Next, right now we're talking about the stuff that you own, then the stuff that you owe on the stuff that you own. Does that make sense? Credit card debt, 100%, because you bought something with that credit, you own something, and you owe somebody else something. So you want to put that number down, because you may have bought an asset. You may have bought an asset. You may have bought gold, but put it on your credit card. So you have gold as an asset that goes on your assets column, but then you have debt. How much of that debt have you paid? All right. It applies to all properties owned, yes, whether it's rental or sell. If you own it, yes, applies to all. These are all of your assets. And again, you can go personal or business with this. If you and your business are the same people, then it's going to be a little bit easier. If you and your business are two separate entities, it can be a little bit more complicated. So now, to your best of your understanding, so if you like, real estate is your business, but then again, you are 100% owner of your business, then yes, the rental properties, those are the assets that you own. Or you can do it for yourself in one sheet, and you can do for your business on another sheet. I personally have something like that, both for my business and for myself, right? And that allows me to, for example, calculate how much I need for my business emergency fund, you know? So if you're a business owner, it is sometimes good to have both. Yes, Erica, you're right on point. She says balance sheet is like static, not flowing money. No, we're not going to talk about cash flow in literally the moment that we're done with this sheet. This is all about static money. Yes, you're getting it, Erica. You have been on fire. I remember you from yesterday too. Super duper cool. All right, so now that you guys have, I see all these assets here. So now you have the assets number on the left and your liabilities total on the right. And now what you're going to do is, again, now you're going to take out your calculator and you're going to deduct your liabilities from your assets. You're going to do assets minus liabilities. And once you do that, you're either going to get a positive number or you're going to be break even, or you're going to be negative. So somebody say, I got it once you got your number. I've got it. Dennis got it. Lisa got it. Amazing, amazing job. Ipsa got it. Caroline got it. Zhao got it. Anita got it. You guys are amazing. All right. So now, if your net worth, this is, by the way, how you calculate your net worth. If your net worth is negative, depending on kind of the debt that you have, then you might have a lower risk tolerance. If it's break even, again, you have low risk tolerance. If it's positive, and by the way, we're only talking about the second component of risk tolerance. How many of you guys remember yesterday I said risk tolerance has how many components? Let's do a quick test over here. 3, Erica, you are on fire. Dennis, 3, perfect. Oh my gosh, I'm super proud of you guys. Yes, Caroline, yes, Curry, 3 components. The first component was your willingness, that is about you. Today, we're calculating your ability to take a risk, all right? Your ability to take a risk, all right? So if your net worth is negative, your ability to take a risk may be lower. And that was, again, yesterday I was explaining how my ability to take a risk from last month to this month went lower. Why? Because we're buying a house, right? We're taking on a huge liability, and my net worth currently is going a little bit lower. It's not negative. I am always making sure that my net worth doesn't go negative, even though at some point it was negative. But for me to have a higher willingness to take a risk, for my peace of mind, I always make sure that my net worth is positive, no matter how good the debt may be. And the way you increase your net worth, one way is to increase your assets. Another way is to increase your cash flow. So that is what we're going to calculate next. And it's interesting because assets are all about investing, which is pillar one of the wealth ecosystem. Cash flow is all about income, which is the second pillar of my wealth ecosystem. You need to have both. So now go to the next sheet. Go to the next sheet. Now we're going to talk about the statement of income and expenses in the geeks world, and in other words, or more friendly words, your cash flow situation. All right. So this one is, again, you're going to have 3 columns. You have 0 cash flow now. All right. So still we want to like hold that on. You may have assets, right? If you have 0 cash flow, again, so now you're going to have something to play with. Now you know where you are. You need to know where you are. Like if you, as scary as it may sound, if you go on Google Map and tell it, hey, I want to go to, I don't know, Mount Everest. I want to go up. I want to grow tall. I want to make a bunch of money. I want to go here. How do I get there? If you don't know where you are, how can Google Map show you the roadmap? As scary as it may sound, even if you're in the bottom of a hole, you need to tell Google Map, hey, I'm in the bottom of a hole. How can I get to the top of the mountain? All right, so that's why we're doing this. I'm not doing this to scare you. I'm doing this so that you know where you are, and then so that you can create that roadmap for you. Are you guys getting it? Somebody say, I'm getting it. Somebody said, I'm getting it. Woo woo. All right, so getting it. All right, so now in these 3 columns, what we're going to do is that you are going to, on the first column, put all of the things that are coming into you, all of the money that is coming into you. And I know you're a money magnet. That is one of your mantras. You are a money magnet. All right. And if you don't have any money right now, start saying that to yourself and believe it, that you are a money magnet. So all the money that is coming to you, that can be, if you have a job, your income. That can be interest on your savings account. That could be dividends paid on your stocks. If you're an entrepreneur, that could be your business income. So for me, my income, actually I had to take a look at my statement today. My accountant put it together again for the whole home loan thing. And, you know, my income comes, I have book royalties that I get paid. I do, like, Instagram is now paying me for reels. Like, Instagram has stepped up and is now paying. I was like, oh my gosh, like the other day I got like a $600 check in my, I was like, what? Facebook is paying? What's up with that? So that was exciting. That was unexpected. And that's because I know that money is flowing to me unexpectedly from all directions. YouTube is paying me, you know, TikTok, I used to get paid by them, then I stopped. Multiple sources of income. Yeah, the more income sources you can have, the better the peace of your mind, you know. So these are all the ways. And right now, obviously, the biggest chunk of my income is coming from my Invest Diva business, but I also have all these other places to rely on. I also have business relations that if I wanted to, I used to, but I no longer have the time, or I mean, I just don't want it anymore. But I also have relationships with businesses. I have relationships with NASDAQ. I have relationships with New York Stock Exchange. I have relationships with investing.com and all these places, TD Ameritrade even, like Coinbase. I have relationships with these places that if I wanted to, I could go and, you know, speak at an event and get paid $100,000 and come back if I wanted to. Right now, I kind of don't want it. So, because I'm like full chilling at home with my hoodie on. So, COVID got us lazy. But I mean, I'm focused more on my people. That is my motivation. And that is the reason why, you know, I'm okay with not having that additional income, you know. So anyways, I'm telling you these stories as you guys are getting all of your income in on the first column. And then on the second column, we are going to have your expenses, all of the money that is going out. So again, This is things that you may not even think of, right? This could be obviously groceries if you're doing it for your personal, right? Your rent goes here. The rent that you're paying goes here, right? You are going to put anything that you're paying for. Outcome streams is like, that was the income stream. This is the outcome stream. For some reason, I'm like blocking out on what I'm paying for, but anything that you pay for, put it out. Like, maybe you can have bundles. So for example, for my business, the business owner, one of our biggest expenses obviously is advertising. Then the second one is my Invest Diva team. The third one, I was looking at it today, that's why I have it in the top of my head. But we have charity, you know, charity is outgoing, so charity there. But anything that is going out, right? Anything that's going out, you want to put it there. And now we're going to do is they're going to sum all of these up on both of the columns. Lisa says, crazy, I just wrote all these numbers down earlier today. It's because you're one step ahead of the game. That is awesome. You're one step ahead of the game. So now we're going to go ahead, sum these two things up, and again, do the same exact step that we did before, which is deducting all the money that is coming in from all the money that is going out. And this one is something, again, so this one is more active, right, over a period of time. So you can, first of all, do this, let's say, on an annual basis. So your annual income and your annual expenses. Or you can do it on a monthly basis, your monthly income and monthly expenses. Corey says, wow, what did you discover? What is happening? And then once you're done with that, and you know if you have a cash flow, your cash flow positive or cash flow negative, you also want to put down the deposit that you're making to your retirement plans, your education, your savings. Carolyn's positive flow. Awesome. You see, sometimes you don't even know. The first time I did this, I was sure that I was going to be negative in cash flow. And then when I did the math, I'm like, oh, I'm actually not that bad. So it's really, really good to know. And sometimes you think you're positive and in fact you're negative. So it's very good to know. Now you're motivated to go and make more money. And making more money is so easy. Did you guys know? Oh my gosh, I cannot wait for Build More Wealth Live because there are just so many toxic money beliefs that we were born with. And that, you know, oh, you can only make money. You have to pay your due diligence. You have to pay. Yesterday, I was talking to one of our $1 Million Family Accelerator students who kind of had went MIA. And I'm like, where is he at? So I kind of caught up with him as a lawyer. And I'm not sure if he's here. I'm not going to reveal your name if you're here. But if you're here, you can say hi. And he was like, you know, I called him, was like literally just laying down on the bed, like almost like, seriously, I was like, are you okay? He's like, my life is so toxic. I hate my job and I have student debt and I have this and I have that. There's this much $300,000 and it's going to take so much time. And I'm like, who says it's going to take so much time? Did you know that making a lot of money in a short amount of time is way easier than making money over 60 years? Do you know how much harder you should work to make $1 million in 60 years than the work that I put in right now to make $1 million per month? It took me 10 years to make my first million. And I was working my butt off. And I'm glad I did it. I was working in the right areas. We're going to talk about what kind of work you should be doing again in Build More Wealth. But now that I've figured it out, of automated things, I'm working half time and I'm making anywhere between $500 to $1 million per month. So he's like, oh my gosh, this $300,000 in debt is going to take forever to pay. And then I can go and start my business. I'm like, are you kidding me? You cannot afford to become debt free first so that you can go and bring cash flow. The way to become debt free is to have cash flow. It's reverse. It's reverse. Like Dave Ramsey, you're great. Like you have all this messaging, but don't do what Dave Ramsey says. Do what Dave Ramsey does. He creates cash flow. He's not worried about his debt. He's creating cash flow. And it has never been so easy, so accessible for everybody to just start a business and create cash flow. How many of you guys already have a business? I'm just curious. Put a B in the comments if you already have a business. Carlos says school didn't teach about money management when I was in school. I don't know if things are changing. We have a lot of entrepreneurs here in the house, nonprofit and an LLC, rentals. That's definitely business. Wedding planner. Love it. So good. We always get a lot of real estate people. So we just starting. Yes, let's go. Super cool. All right. Amazing. Congratulations. Congratulations for having your own business. Even if you have a side hustle, I noticed even like Tristan put he has his own business because he does. I know he works for us. He has his own business. Each and every person who works for Invest Diva, did you guys know? They have their own business because it makes more sense. I mean, I gave them the option. It's funny because with, some of our key people, it would make sense more, like I would have more power over them if they're my employee. Obviously, I may have to like pay a little bit more stuff, but I would like be able to tell them, hey, time in, time out, right? But we're Invest Diva movement. And well, I only have people who are already loyal and super passionate about the Invest Diva movement anyway. So I don't care if I own them. You go do you. And everybody's jealous that we have people like Tristan, on our team who are awesome, who are passionate about the movement, and they're rocking it on their own too. How cool is that? This is the way that we're going. This is the way that the world is moving. So she says, your honesty is a breath of fresh air. I mean, I got fired after a year in corporate America. Like I don't, first of all, I don't know how to do the corporate thing, even if I wanted to. So it's cool. It's all cool. All right. So now, the last thing was your savings, your total savings in the past 12 months. And we want to know your total expenses for the past 12 months and your total income for the past 12 months. Okay. And this again is going to give you an idea of where you stand right now. Again, we're not getting super deep right now on this, but how many guys are kind of having an aha moment about where you stand financially? Xiao says negative cash flow. Amazing. Now you know where you are. Put an A in the comments if you have a better understanding of your finances right now. Awesome. Dennis, Caroline, Slaffler, Anita, Dennis, Carolina, a lot of Caroline. So good. Mandy says, I had this 2 months ago when I did the masterclass, was negative and now better. Awesome. So good. Yes, you could be investing so much more. Super cool. Now you know what's happening. Now you know what's up. All right. Now, you have a screenshot of what's happening with your portfolio. And based on that, again, we're not getting nitty-gritty. The nitty-gritty stuff is in module 3 of the Power Course. If you're there, a lot of people get stuck there. So I wanted to give you the shortcut here. Based on this, if you were to rate your ability to take a risk, yes, the calculation, Rosa Angela, for the cash flow situation, one of them was deducting the income from the expenses so that you can see if your cash flow positive or negative. And then we also have a standalone savings, total savings for the past 12 months, total income for the past 12 months, and total expenses for the past 12 months. You just are looking at these numbers right now. And it's going to give you the story of your life, of your money life in numbers. And if I look at it, I may not understand it, but because you're looking at it, it is your life. You're getting it. That's why it's so powerful to do it on your own. Because when somebody else does it for you, every time my accountant does it for me, I'm like, oh my gosh, numbers. Oh. But when I do it, I'm like, oh, okay, I did this. Like it actually, you own it, right? You need to invest more in yourself. Oh, yes. Oh, yes, you're already, Carlos, you are right on point. You are here. You are already investing in yourself. I am so proud of you. You need to be proud of yourself. You need to go to bed tonight and say, I invested in me today. You value yourself today. Congratulations. This is day 3. You guys are amazing. Yes, like go celebrate it. I invested in me today. That is something to be proud of. Not many people do it. They continue scrolling on TikTok, they continue scrolling on Instagram, they continue letting all the social media distract them and prevent them from investing in themselves. So you're doing it. It's amazing. Okay. So now, we're getting to, you're just having a screenshot, very simplified screenshot of your financial situation. Based on this alone, if you were to, again, be honest, if you were to rank your ability to take a risk in the financial markets, what would you rate yourself? We're talking about ability. We're not talking about willingness. Your willingness is a separate one. We're going to rank that in just a little bit. Right now, we're talking about your ability. For example, if your net worth positive, if your net worth is positive, and if you're also cash flow positive, and on top of that, you have a bunch of savings, guess what? Your ability to take a risk is higher. If again, I'm going to go through a bunch of scenarios. Let's say your net worth is positive, but your cash flow is negative, and you have a bunch of savings in your savings, your risk tolerance may be medium, depending on how much. Like if your cash flow is positive by a lot, like you have a bunch of cash flow coming in, obviously your risk tolerance is going to go higher. If you have a massive mega net worth, but you have zero cash flow, again, your risk tolerance might be higher. So be a judge. We're getting a lot of mediums here. Medium to high, that medium high is kind of like the steak. Medium rare, rare, all the things. So medium low and low. Yeah, medium low. All right, cool. Which type of steak are you? All right. And then, so your willingness to take a risk, we actually give this one, there is this questionnaire that we give away when you attend our free masterclass. How many guys have attended my free masterclass? Okay, so at the end of the free masterclass, we'll send you guys that risk management toolkit. There's this questionnaire that kind of goes through your personality, that kind of ranks you, what your willingness to take a risk potentially is. But again, you know you. What kind of a person are you? Like I'm going to ask you this question. When you go to, do you go to Vegas? First of all, would you go to Vegas? Like I won't. That means my risk tolerance is very, very low. My willingness to take a risk. Okay. No matter how much money I have, I do not go to Vegas. All right. How many of you would go to Vegas and you would only bet, I don't know, like $5, and then you wouldn't get carried away and you would just end it right there? Right? How many of you are like, I'm gonna go jump off the cliff and kill myself on the way to making money? I don't know, something like that. So your willingness to take a risk. And also mind you that your willingness to take a risk really, really depends on what stage of life you are right now. So depending on your age, for example, typically between 20 to 45, your willingness to take a risk is higher because you're like, I have time, I'm going to do this, I'm going to figure it out, I'm going to do trial and error. Even though your ability to take a risk may be lower, that was exactly me when I first got started. I didn't have any money, but my willingness to take a risk was higher, so it kind of balanced it out, you know? And then 45 to 60, typically you're like, okay, I'm concerned about preservation and what I already have and thinking about retiring. So maybe medium, depending on your age. If you have kids, your willingness to take a risk typically, oh, Erica's a single mom. There you have it. No risk, zero, right? Zero willingness, right? You want to be investing in things that make you confident. Now, this is interesting because the second component of risk tolerance, which is your willingness to take a risk, and the third component to risk tolerance, which is your confidence in the asset you're investing in, they're correlated because the higher the confidence that you have in that asset, the higher your willingness to take a risk. And you can increase your willingness to take a risk by doing thorough analysis. And the third point of the Invest Diva Diamond analysis, fundamental analysis. What do? We go and do research on that asset. We show you how to do research. We're going to talk about the Invest Diva Diamond analysis. How many of you guys have heard of Invest Diva Diamond analysis before? Put an I in the comments if you've heard of Invest Diva Diamond analysis. Third point is all about increasing your confidence in that asset. And then it's interesting because like we have coaches now, we have former students or current also students who are now coaching in the power course, like Tanya, right? So she has high risk tolerance. She's always looking at these like up and coming, like trendy, cool assets. She always has like something really cool up her, sleeve. Whereas I'm like, ooh, no thanks. I'm going to stick to my Amazon, right? So, and I mean, it's absolutely cool. She's not wrong. I'm not wrong. We are just investing based on our risk tolerance. The reason why we both have very productive portfolios. I've made a bunch of money. She's made a bunch of money. She was one of our first $500,000 award winners, and she's a risk taker. I was one of our first $1 million award winners, and I'm not a risk taker. You're going to make money either way. So don't lie about it. The reason why we were able to achieve this is because we were honest about what our actual risk tolerance is, and then created a strategy that prevented us from making stupid, panicky decisions. That's the name of the game. That's the name of the game when it comes to investing. The reason why we do all of this beforehand is so that we get the emotions out. Like this morning, we were having an investing strategy session with our $1 Million Family Accelerators, and one of our students, she's like relatively new, and we're looking at the market sentiment. And I think she has a job in numbers, right? Jennifer, what's her job? She's a numbers person, and we're like looking at the market sentiment, and we're like literally seeing how the markets movements have nothing to do with numbers. It has everything to do with emotions. So once you know where you are, once you know who you are, you can manage those emotions way better than those boys of Wall Street who are getting drunk as we speak. Always drunk, Vegas. All right. So, and then obviously above 60, you probably, again, your risk tolerance goes lower, or maybe your risk tolerance goes higher. You're like, you know what? I'm dying anyway. Like I want to go like, depends, right? Depends. But based on where you are, personally, also your willingness to take a risk goes high and low. Now, there is another way to measure your willingness and your confidence in an asset. And I love this so much. And you're going to see this happening over and over again. I do this every single time before I hit the buy or sell limit order buttons. And is that you ask yourself these two questions. How many questions? Put in the chat box. How many questions you're going to ask yourself? You're going to ask 2 questions. Let's say you now know exactly what your risk tolerance is. You have done thorough analysis on an asset that you want to buy. Now we're talking now specifically about investing in online financial markets. You could also be talking about real estate, but that is not what we specialize in. We're only talking about investing in either stocks long-term or investing in cryptocurrencies long-term, or commodities long-term, or I don't know, gold, whatever, long-term. All right. So give me an asset. Let's say give me an asset you're interested in, or you want to add into your portfolio, or you've already have it in your portfolio. You've been eyeing it, you know a lot about. We get Apple, we got LCID, Bitcoin, Amazon. Give me an asset. Bitcoin. Got a lot of Bitcoiners here. All right. Meta, Bitcoin, Microsoft, Bitcoin, Rivian, Ethereum, PayPal, Starbucks, Tesla, Ethereum, Carnival. Amazing. All right. So now everybody, mRNA. All right. Very good. Very good. Okay. So we're not going to do the analysis, the technical analysis on it today. If we get to it, I'm hoping that we're going to get into that on Friday. So as you know, again, the Invest Diva Diamond analysis have 5 points, right? The first point is capital analysis, what we did right now with the risk tolerance analysis, knowing where you are. The second point is intentional analysis, something we're going to get into tomorrow. Third point is fundamental analysis that we'll hopefully are also going to get tomorrow. There are a lot of things. The fourth point is technical analysis, and the fifth point is market sentiment analysis, but they're all related. So right now, I'm going to give you the key. There's 2 questions that I discovered that always helps me with the green light and with my confidence, right? So let's say you've done your fundamental analysis, you have done your technical analysis, and you're like, okay, I want to buy, let's say it's Apple, and you have identified, let's say 3 prices, or let's say you want to buy at current market price. Let's simplify it. Let's say you just want to buy at market price. You're not into all this technical analysis stuff, and you just want NVIDIA, good one, and you just want to buy at market price. Question number 1, everybody's taking note. Question number 1 is, if I invest today and the price drops by 50% tomorrow, will I freak out and panic sell, or will I buy more? That's question number 1. So let's say, I don't know, Apple, I don't know what price Apple is. Let's say it's $100 and you really want Apple in your portfolio, and you're like, I'm going to buy it right now. Everybody's like, Jim Cramer told me to buy Apple, whatever. But you don't do that because you're an Invest Diva. You have done thorough analysis, right? So if you buy right now and it drops more, what are you going to do? How do you feel about it? Kind of feel that for a second. Put yourself in that situation. It's like, okay, you bought today at 100 and tomorrow it dropped to 50. How do you feel about that? Potentially crappy, but how crappy? Okay. And then you ask yourself question number 2. If I don't invest today and tomorrow, today the price was $100, I was hoping it would drop. It didn't. Tomorrow, it skyrocketed to $200. How would I feel? Would I catch FOMO? Would I kick myself? Would I feel crappy? Again, you potentially will feel crappy, but how crappy? Again, put yourself in that situation. Like you didn't buy and now it's $200. How crappy will I feel? Now you want to measure the first crappy feeling, the one that you bought and it dropped, against the second crappy feeling, the one that you didn't buy and it went up. Which one is crappier? It's a lot of crappiness here. And as you can see, your answer actually reveals your confidence in that asset. Okay. Isn't that cool? So Carlos has a good point. Stop investing in companies that are already strong. Invest in those have a better future. Again, that is great for you, Carlos. If that is what you believe have a better future than Apple, that shows your confidence. Again, as you can see, I never tell you what to buy. I give you my suggestions. I'm like, okay, this is what I'm eyeing. This is what I see. And yes, there's always a thing or two to say about companies that are already more established. They may not have as much growth potential because guess what? Risk and reward are directly correlated. And that's why it's actually important for you to increase your risk tolerance, your ability to take a risk by increasing cash flow. That's the reason why we're now having this Build More Wealth Live, so that you can make more money, so that you can take more risk. Because when you take more risk, you make more money. It's just like, it's this like weird cycle. We have to latch onto it at some point, right? And it all comes down to believing in yourself that you actually want it, because everything involves risk. Investing involves risk, not investing involves risk, getting out of bed involves risk, staying in bed involves risk, drinking too much water involves risk, not drinking water everything involves risk, right? It's just knowing of what you actually want, which is what we're going to talk about tomorrow. That's the intentional point of the investing without analysis. All right, so I do this. I ask myself these two questions literally for every asset at every buy limit orders. I typically set 3 buy limit orders for my assets, and I ask these two questions at every buy limit order. If I set a buy limit order for Bitcoin at $13,000 and it doesn't reach it and it goes up, how crappy do I feel? If it reaches it and then it drops to $6,000, how crappy would I feel? And I measure them against, and I decide whether or not to set that particular buy limit order. All right. Oh, here Erica has a very cool question. I love this question so much. She's asking, how do you recommend splitting up? Oh my God, don't get me started. Let me have my drink. How many of you know my views on index funds? Index funds, great stuff. They're great stuff. They're basically a bus. If you love buses, if you like riding a bus instead of having your own car, go invest in index funds. And I do, to be fair, I do hold a portion of my portfolio does have some index funds. I do have VU, and I do have, I guess, something else, the SC something, the one that is global one, the emerging market one. Okay. But the rest of it, so here's what an index fund is, right? An index fund is a basket of, let's say, VU is a basket of the S&P 500. It tracks all of the stocks in the S&P 500, the best ones, right? Best ones according to who? According to whose risk tolerance? We don't know. It's just the whole market. Diversified. Some, say it's lower risk. It's fine. It is a bus. It's like getting on a bus, giving all the control to the bus driver. And, if you're cool with that, that's fine. I like to be in control of my financial future. That's literally our motto. We take control of your financial future. And I create my own index fund. Like, yes, people look at my portfolio and are like, oh my gosh, you are so diversified. You might as well invest in an index fund. No, an index fund doesn't say how much I invest in what. There are assets that I want to have more allocation than others. I want to have more of, let's say, I don't know, I'm just going to throw out now. I want to have more of Microsoft than Lilium. And they're both in S&P 500. I'm invested 3 times more, maybe even 10 times more in Microsoft than I'm in Lilium. But I have both. S&P 500 doesn't allow me to do that. All of these different markets, all of these sectors have different cycles. They're going different. Right now, tech is getting a massive hit. S&P 500 brings them all together, bundles them all together. Investing in index funds is better than not investing at all. Totally. If you want to like not do anything, just want to like have somebody else in the driver's seat, invest in the index funds, but you are Invest Divas, you're here. You know now your risk tolerance. ETFs and index funds are basically the same. Exchange traded funds and index funds, I guess the index tracks the price, whereas the exchange traded funds, I forgot the term of that. It's basically the same, if not exactly the same. I don't know. Tristan can help me with that. I forgot. Very similar. There is a difference between mutual funds, though. So mutual funds and versus index funds or exchange traded funds. Mutual funds are the ones that are managed by a money manager and have very high fees. ETFs and index funds, the good news about them is that the fees are at least lower. So you're not paying a whole bunch of money to invest in them. But mutual funds are the ones that a money manager who was, again, drunk last night is managing the portfolio and charging you a bunch of money for it. So that's cool. Don't do that. At least if you want to do something, do ETF or an index fund, right? So so that's my thing. That's my thing with index funds versus stocks, because I want to know how much I'm investing. When I look at, when we do Invest Diva Diamond analysis, we look at the cycle, we look at each individual asset, we give each individual asset a lot of love. If you wanted to put it, okay, my brain always goes into very dark, stupid places, but you know, we talk about that when you want to, tomorrow we're going to talk about asset picking, like how to pick that asset. And we talk about when you pick an asset, especially as value long-term investor, you want to be in it through sickness and what is it? Health, sickness. And yeah, you want to marry it. All right. We're not like just dating a bunch of assets. We're like actually marrying them. And I know like, it's kind of like polygamy, but we're going to be, what am I talking about? I'm trying to come up with a metaphor. Index funds versus having your own index fund. Like what kind of, all right, make it stop. I'm not going to continue, but you get the idea. You get the idea, right? You get the idea, right? It's having a lot of control. Having your own, managing your own portfolio is like being one of those Arab guys who has like 4 wives in 4 different houses. Whereas I feel like, I don't know, maybe an index fund is being in an open marriage. I don't know. But I hope you're getting it. Are you guys getting it? Are these like metaphors helpful at all? It's a great analogy, right? Thank you. All right. So I'm glad I'm cracking myself up at least. So with that team, with that, you have a homework. You have a homework, and I'm so glad you guys are looking forward to the course. It's super cool. I don't know which course you're talking about, but whichever course you're looking forward to is going to be awesome. The homework is that you now kind of know your risk tolerance. You knew your ability to take a risk. You know your willingness to take a risk, and you have some confidence over specific assets. So your homework is also to get ready for tomorrow, when we're going to go asset picking, is to pick 3 to 5 assets, whether it's cryptocurrency or stocks, or maybe even index funds, and measure your risk tolerance for that specific asset. So it's going to be your ability to take a risk, willingness to take a risk, and confidence on that asset. Is it medium, low, high, medium, rare, whatever, and put it there and bring that tomorrow to when we're going to start again right at 8:30. And for those of you who've been asking about, okay, what's course and what's happening, again, so you guys are in Zoom, you probably already know, you already have your, have gone through buildmorewealth.com. I just want to show you what we're talking about when it comes to BMW Live, the actual event next year. Would it be okay if I talk about that a little bit? So once you go to buildmorewealth.com, and you put in your name and your email address, which I'm revealing apparently to everybody now. Then you get to this page, you're going to choose your experience. I just want to tell you a little bit about what's happening, what exactly this event is. So we have the general admission, which is going to be 5 p.m. to 6 p.m. every day next Monday through Friday. And you're going to basically see everything on Facebook. We're going to be broadcasting on Facebook for an hour. You're going to see my training, and the recording is going to be available for those 7 days. Well, for five to 6 days. I guess Saturday, we're going to take everything down. And that's what general admission gets. And then we have the VIP experience. The VIP is an actual experience. And it starts at 4 p.m. every single day. And 4 p.m., you get to be on a Zoom meeting with me. We have very limited seats for this. And we're already actually, I guess Jackie was telling me we're hitting the limit. So I wanted to just go through this before we run out of seats completely. So you're going to, obviously you're going to get access to the Facebook group and all the good stuff. You're going to get a bunch of courses that are going to allow you to get, warm yourself up and also have access to after the event. You're going to have the VIP backstage pass. So we're going to talk, we're going to ask questions, and it's going to be a lot cooler. Like it's like fire. I'm going to be doing a ton of high-level coaching, and we have some special guests. We have a very special guest who's going to talk about artificial intelligence for our VIPs. And he is the leader basically for over 2 decades in AI. He's going to talk about how you can use artificial intelligence in your investments, in your business. You're going to have a deep dive course on technical analysis, personal finance. You're going to have free membership to our Money Mindflood system. You're going to get a lot of really cool stuff. Ultimate Precious Metals Guide. And VIP has 100% no questions asked, money back guarantee. The only question that we're going to ask you is that did you attend? So we're going to see you. VIPs who attend all of the 5 days live and have their camera on for all 5 days. And at the end of the 5th day, they say, Kiana, you didn't, this is the catch. If you believe that I didn't provide 10 times more the value of what you're going to be paying for a VIP, which is $297, if I didn't provide 10 times the value, we're going to give the VIPs money back guarantee. But the catch is you have to attend. You actually have to see the thing. And then if you say, hey, it didn't provide any value, not let alone 10x, then we'll give you money back. I don't want your money. If I didn't serve you, then why would I want your money? And also the VIP get that exclusive raffles to get free iPads, headphones, remarkable notebooks, a ton more, hats, merch, so much cool stuff. And you're also going to get free access to purchase an upgraded platinum VIP ticket. But that is going to be only to VIP. And we're going to talk about that later. So that's what's up. That is what the bill, again, I don't know how many seats we have more because again, so this is going to be face-to-face. Obviously, I don't want to have like way too many people there. So we have a cap and it looks like that we are getting to that cap. So that's why I wanted to just take this time here to let you know what's up so that you don't say, hey, Kiana didn't tell me and now I feel FOMO. So I don't want you guys to catch FOMO. I want to tell you about it. And oh my goodness, did I just go until 9:50? I guess I love you guys really, really much because I did not sleep last night and I was planning to go to bed at 10. So you guys, I love you. You guys are amazing. Thank you. Congratulations for taking action, for being here, for doing the things, for commenting in the chat. And I will see you guys tomorrow at 8:30. Mwah. Mwah, mwah, mwah. Oh, on the count of 3, before you go, yell it out. Yell this out. I know I can't hear you. We're going to yell this out. I am abundance. I am abundance. Yes. So good, team. You are abundance. You are abundance. You are abundance. I'll see you guys tomorrow at 8:30. Bye.